Good morning, traders. It's 7:06 a.m. Chicago time on Tuesday, the 3rd of November, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. This is an early trader bite. It's a pre-recorded trader bite. We're about an hour earlier than usual. I have obligations to my kids I need to take care of this morning, and so I'm releasing this early. Couple things to note. One, we have an open AMA this Thursday at noon Central, 1 Eastern. The AMA is just open to any questions. If you're interested, you can pre-submit your question. I'll show you the page here in a second. To register. Also, please go to my Twitter feed at twitter.com/futurestrader71 to see the link to the registration there. There's limited space on the webinar software. It's limited to 1,000. The last one had 800, a little over 800 in it. So it fills up fairly quickly. So if you want to be a part of it, and I definitely welcome you to be, we'll definitely go over some, not only some questions, but also look at some interesting stats, edges, things like that. Anyway, back to today's AMA, Trader Bite. The Reserve Bank of Australia kept policy on hold, interest rates on hold at 2% as expected. AIG had a terrible quarter. AIG announced, let's see, AIG, there you go. AIG announced a loss of 18 cents per share, $500 million in restructuring charges. Just pretty poor. Carl Icahn had announced that he has a big stake in a company and he wants it to split. So he wrote a letter to the CEO asking for that to happen. BMW reported Q3 net 1.58 euros versus 1.42 estimated. Revenues 22.4 billion euros versus 22.3 billion. The big surprise was UBS out of Switzerland. It reported profits at 2.07 Swiss francs per share, expected at 1.73 Swiss francs per share. That's a big jump for a bank. Revenues at 7.17 billion versus 7.82 billion expected. Other than that, there's really nothing else. Looking at the calendar ahead today, we have ISM New York at 8:45, expecting 45.7. That is a low tier number. At 9 o'clock Central, 10 Eastern, we're looking for U.S. factory orders, expecting negative 0.9%. At the same time, we're going to get IBD tip economic optimism, expecting 47.4, prior 47.3. And then that pretty much clears it up for the day. We have ECB Speaker Draghi commenting in Frankfurt at noon Central, 1 Eastern. You want to pay attention to that. And then after the market, we have Tesla expected 54 cents per share. Remember, looking at the rest of the week, it's pretty busy. Tomorrow, PMI services in Europe, Germany, and UK. European PPI, US ADP, payroll release, trade balance, PMI services, ISM non-manufacturing, Fed, Yellen, Fisher, and Harker. Thursday, we're looking for the BOE rates with the minutes, ECB economic bulletin, ECB's Draghi, Fed speakers. And on Friday is the big one. We're looking for non-farm payrolls and the unemployment release, as well as Fed's Bullard and Brainard. Let's look at what's going on here. Again, as I said, I'll show you the registration page. I don't expect you to type all this in, but you can definitely grab it off of Twitter, as I said. Let's take a look at what happened yesterday versus what was expected. The The expectation yesterday for those who attended yesterday's Trader Bite was for responsive buying back to the point of control 2080.50, and then a push to the value high of 2084.50. We got that. We had an open that pushed lower and then started to drift up. At first, I thought it was an open test drive, given the weak nature of the down rotations. It rotated up better than it rotated down, but looking at the delta down here revealed that really there's not that much participation on the buy side. It was more a matter of offers being removed than buyers really buying up the offer aggressively. So you can see as price went up, the delta was sideways to down, and then as soon as it would peak up, it would fall back through until later in the session. The break of the IB gave us our first updraft. Remember, the IB has a 97% probability of being broken on a day session. And then from there, it was really quiet up till about 1 o'clock, where the real move started to happen. And you could see that we ended up with about 30,000 positive for a delta, which is a pretty good delta. Yesterday was a trend day by all measures. The point of control shifting from down here to the top, the point of control, the profile being elongated, not having any consensus on balance, and having a double distribution are just hallmarks of a trend day. So we ended up with a test of the 2100, and the pullback. My expectation on the upside, the extended target was 2103.50, and then I also had a line up at 2106 from a longer term chart, but didn't quite get there. It hit the century figure. We do always expect a response at the century figure because that is a huge strike price. 2100 is an area that is likely to get participation as soon as on the first touch at least. So overall, I want to show you what's happened here. This here is a profile. So if I zoom out, that's ugly. If I zoom out and take everything that's in this area, and I place a place a profile around it, you'll see that what we have done is we have transitioned from the lower end as an MCLVN up to an MCLVN, and then the next area starts at 2100. So right here, right at yesterday's high, we get this low volume node, which we often do again, as I said, at the century figure. Generally, the volume is just above and just below that. Again, for hedging purposes, remember futures are originally a hedging instrument for the cash instrument. So the next area up is likely to be this 2103, which is a naked point of control, also an MCLVN. Before we start making our way up to the next high volume node. This high volume node is the last that we would confront. It's at 2107, 2106.50. Yeah, that's where the 2106 quarter 50 comes from. So this is the last frontier before new all-time highs at 2117. So for now, I believe that today is likely to be a pullback day. Let's switch back to a 15-minute to look at that. And then it's also evidenced, we still have an hour and 15 minutes to the open, so a lot can happen on the overnight session. But I'm not anticipating news. But if we look at what's happened since the close yesterday, we hit our 2100 for a rotation back by about 7 points or so, and we closed at 2094.75, and the market has tested the point of control overnight and has just drifted downwards with a very balanced profile. So this is showing that participation is fairly on the low side. 110,000 contracts have traded versus 150 or so lately, and it's in a balanced environment. So the expectation is that this is likely to pull back a little bit. The first move is likely to be responsive back up to the point of control, and then I expect it to peter out and start chopping in here in anticipation of tomorrow's ADP numbers and the other slew of numbers coming in. So my primary hypothesis for today is that we're likely to see some responsive buying towards that point of control, towards the close. It may actually retest this 2100. The 2100 high does not have a taper on it, with a point of control right up against the high. So there's plenty of fuel to push this through to 2103.50. But I expect responsive buying up to the point of control at 2097.50, and then potentially a push to test the 2100 and push above a little bit. But overall, I expect this to drift sideways to downwards into tomorrow's session. I'm not looking for this to push through into the next point of control, high volume node at 2106.50 right away today. However, that is a possibility, and we just need to be prepared for it. But the market is likely to rest. If we look at the overall picture, we've got quite a bit of range. Going. Yesterday we were right on the edge of what we consider to be normal. Normal is this first standard deviation, this blue area, 21.25. Yesterday we had 24.75 for range. The volume was in line with what is normal. So just like all updrafts, we will get some range, but on lower volume. That is just the norm for rallies. So nothing remarkable about yesterday's rally. If we look at the breadth overall, we finally have breadth that is moving in line with price action. So we've taken out the prior highs, whereas before we were making higher highs on lower breadth. Now we've got breadth pushing up through the prior high with the market. So that's a good sign. That's a +1 for the bulls there. But again, we're up against 2100. Chances are, the probabilities are higher that we would pause up here after a test higher. That's all I have for you for this morning. Again, we'll see what happens between here and the open. I'll be commenting on Twitter before the open. And then if you have any questions, obviously catch me at futurestrader71.com/contact, or ping me on Twitter, and I'll be happy to answer if I can. Good luck, and I'll catch you tomorrow. Take care.